Good afternoon and Happy New Year, everyone. Welcome to Hit the Bid here on January 4th. This is Ty Robbie here through Week 1 Market Watch. Today we're going to be taking a look back on last week's action and see what happened across these markets and see what we have to look forward to as we kick off the new year. So let's jump right in here and get started. First on the board today, we got our February live cattle. We did see a slow start last week as prices just were hanging out inside this multi-week range before seeing a strong finish here late. Wednesday's action pushing above that multi-week range high and really getting that ball rolling higher here on Friday as this market pushed up here, closed that gap, and finished the week up there above 236. Really strong bullish move here as the live cattle market picked up nearly $5 along the way on pretty heavy volume down here. Was a pretty good recovery and a nice breakout here above this gap we've been trading below for the last about 2 months. This market has staged a pretty impressive recovery after this breakdown throughout the October and November months, putting in that low here right around the Thanksgiving week. Seeing a nice rally here up before consolidating for nearly 4 weeks throughout the late part of December. Bulls really hanging on to these major moving averages, showing good support in all the right spots. And this multi-week consolidation finally breaking out here last week is confirming this uptrend, and we should see the bulls continue to grind this market higher as we kick off the 2026 year. Over the last couple months, we've traded around this 231 to 232 area. It's been a pretty key level. The line might be a little bit blurry, but as we can see here, trading above it offered really good support throughout the September and October months. And then we did see it start to trade down below it after the beef price debacle, and this market breaking down with that gap and keeping this market capped up here right around 232 over the last couple months. But with Friday's action pushing above that gap and that major line there right around 232 has us back up here in bullish territory, and we should see this action continue here into the new year. Bulls are going to have their sights set back up there on those all-time highs right around 250. We are only about $14 off of that, so this market could be up there in the next couple of weeks. But bulls have good momentum rolling here at the moment. We should see that action continue if we do get some more bids here above 236.30, which was last week's high. Should keep that momentum rolling higher. First stop is going to be up here between 240 and 242.5. That's going to be a spot up here where we did see some resistance throughout September and October, and kind of the epicenter of this breakdown we had back here in mid-October. Look for prices to head up there and start visiting some of those areas. That's going to be where there's going to be some inventory left over and some sellers that may need to get filled. Bulls are going to be looking for that to find some liquidity as we move up in that area. At the moment, all signs are pointing up. This uptrend remains intact. If this market does start to round off and come back here, we do have plenty of support down here in this multi-week range. Over the last nearly 4 weeks, we have traded here right around 227 to 232. If the market does pull back and revisit this area, that's going to be a good spot for the buyers to reload once again and try and take this market higher. But at the moment, the momentum is rolling. We had a nice heavy volume rally here on Friday. We should see bids above 236.30 this week and keep this market moving higher into the 240s. All signs are looking up. This cattle market staged a nice recovery here, and we should see prices continue higher over the next couple of weeks as we move into January. Next up, we got our March feeders. This March contract has been where the relative strength is here in this in this cattle market. Fats consolidating, kind of trading sideways over the last nearly 4 weeks here, while this feeder market has made just a nice steady grind higher, slowly drifting ever since we made that close above our 20-day high back here in late November, early December. Getting above these major moving averages, we weren't able to revisit them as the bulls just kept on grinding this market higher. Same consolidation phase, but with a nice slow, steady drift to the upside. Slow start last week as well, as this market started to pick up some ground above 340, but as the new year kicked off, the bulls jumped out here and had a nice strong rally, picking up nearly $8 and finishing back there above 350. We did clear this gap early last week and should be pretty smooth sailing from here as the bulls are rocking and rolling to the upside. Bids above 353.5 should keep the momentum pushing up here into the 360s. Look for the bulls to try and target this 365 to 366 area where we did see this market start to break down in mid to late October. That's going to be the spot where there's going to be some leftover inventory and the bulls are going to want to get up there to find some liquidity. Look for this uptrend to keep on rolling. We are about 25 bucks off these recent all-time highs, which printed at 378.60 back on the 16th of October. Bulls are going to keep on pushing this market. We should see this momentum carry us up throughout the next couple of weeks. Any sort of pullbacks we get, we should try and find some support down here in the 330 to 340 area. These moving averages are going to continue to climb up into this area and should offer support if we need it and if we get back down into there. But at the moment, this market is rocking and rolling. We have the momentum to the upside here for the bulls, and we should see this cattle market keep on grinding higher. Look for both feeders and fats to continue pushing higher as we kick off 2026. Next up, we got our corn futures. Going to be taking a look at a couple months here, but starting off with our front month March contract. Last week, we did just see this market swing from the range highs back down to the range lows as the bears pushed this market from 450 all the way down to 437 at the close. Still remaining inside this range. Range continues to be 435 to 455. This market doesn't seem to have anything to say it's going to change. Look for this market to stay range bound and keep chopping back and forth. We did have a weak finish here by the bulls as this market finished down here near the range lows. However, this bottom third or bottom quarter of this range has offered good support here over the last couple months. We should see the buyers step in, try and offer some support right here in between 435 and 440. Look for the buyers to turn this thing back around and send it back to the top end of that range and expect this market to keep on chopping. We look out here into those spring and summer months with the May and July futures also trading in that same range. The numbers vary a little bit, but the range remains the same. Look for that action to continue. Going back to this March contract, if we do see this bearish momentum carry through the bottom end of this range at 435, look for a close down here below this level to confirm any sort of new breaks. If we do get down here below 435, we got a lot of inventory over the last few months here that are going to start to unload and could offer some more selling pressure to push this market back down here towards 425 and potentially down here into the low fours as well and get a downtrend rolling. But until we get a clear and close beyond either edge of this range, we expect to see this thing keep on chopping sideways. Not much else to look forward to here in this corn market. Look for these range-bound conditions to continue. Bulls should try and offer some support down here and push this market back up here towards the top end of that range throughout the early part of January here. Heading over to the crude oil market now. Last week was a pretty quiet week. We did see the December 26th range with a big breakdown here the day after Christmas. And last week we saw this market just hanging out inside that prior Friday's range. Market swinging back up here towards 59, not able to get up there, but continuing to see some resistance here in the major moving averages like we've seen over the last couple months. Bears still remain in control, and we have this big picture downtrend intact. Monday and Tuesday's rally up here seeing some resistance with Wednesday and Friday's action pushing us back down there towards 57 to 56.60, which is our prior week's low. Look for this market to hang out here in between 57 and the 59 area. And as the bears continue to hold the line, look for them to keep on the selling pressure. Until we get a breakdown here below 56.60, though, we should see this thing just kind of be stuck here in about a $2 range. Offers down here below 56.60 should get this market rolling back down to 55, target this prior swing low. And if the bears want to keep this downtrend rolling, we should see a nice clean break of this 55 level, which has kind of been the yearly low, give or take a few cents here, right around 55 to 55 and a half. If the bears are able to push down below that, we could see this thing start to accelerate and push down here towards 50, even down into the high 40s. However, this market has had very little volatility, pretty tight range days, and so not expecting a real fast break. But if we do get down here below 55, we could see the selling pressure start to accelerate and see this oil market continue pushing down, see oil keep getting cheaper, and hopefully get this market pushing down there into the low 50s. Bears are rolling to the downside. This downtrend remains intact. Look for them to keep on pushing. If the bulls are able to push this thing back above and get a close above that 50-day moving average, we would expect to see this thing pop back up here into the 60s. But the 50-day average has been a pretty solid line of resistance here over the last couple months, and we expect to see that thing continue to hold. So look for the bears to continue pushing this market lower. And last but not least, we got our equity indexes here, starting off with the S&P 500. Last week, we did see steady downside as this market was pulling back off of these recent all-time highs up there at 69.94 here in the S&P futures. This market pulling back down here, settling right here, right around this 20-day moving average. Nice little range day here on Friday as there's kind of a battle going on here between the buyers and sellers. offering good support down here right around the 20. We continue to see a little bit of divergence here amongst our indexes. The S&P being a good mix of the tech and industrial sectors, so it is seeing a little less volatility. Nasdaq did see a little bit deeper of a pullback last week, briefly testing that 50-day moving average, but still trading above it. Also, if we are still trading above this prior swing high here from mid-December, right around 24,875, we should see more support continue to step in. Buyers are trying to put some more pressure up here on this 25.8, 25.9 level. If the bulls are able to get a nice strong breakout above that, should be pretty smooth sailing and get a nice new power trend rocking and rolling here into quarter one of 2026. Nasdaq is definitely where the weakness is, though. Semiconductor sector keeping a weight on things, while industrials, financials, and everything has been where the strength is. The Dow has been hanging out up here near all-time highs. We did see a pretty solid recovery here on Friday in this Dow index. This market breaking down early, but having a nice strong finish to the day on Friday, pushing back above that opening range high and settling the day right there around 48.6. Good support at that 20-day moving average and these prior week lows. We should see this market try and get a bid here above 48.6 and Friday's high. Should see the Dow kick off and head back towards these all-time highs. This is going to be where our relative strength is going to be, is in this Dow index. Look for the industrial financial sectors to keep pushing this market higher. Try and get this NASDAQ sector, if it's able to confirm and get above this key level here, we should see a pretty strong power trend here. But wait and see. We got to wait for that confirmation with a close above that level to confirm it. But at the moment, all signs are looking positive. Everything's looking up. We're seeing good support here on the S&P and the Dow. We want to see the Nasdaq continue to hold that 50-day moving average and the swing low. If we're able to check off all those boxes, we should see this market turn higher and see this market continue to push up into new all-time highs. The uptrend remains intact. Now is a good time to remain invested. Look for some of these key levels to hold. If our indexes do start to slip down here below the 50-day average and NASDAQ is able to break this swing low, that'll be a time to start raising cash and getting defensive. But in the meantime, we're looking like we're seeing some good support here, and we should see this market continue to rally throughout the month of January. As far as news goes this week, we don't have a whole lot to look forward to except for some employment data here late on Friday. We do have unemployment and non-farm payrolls coming in throughout the late part of the week, so keep a look out for those numbers late this week. Could add a little bit of volatility, but this market's looking like we're seeing some good support, and we should see this uptrend continue and start 2026 off with a nice little rally here. So look for the upside to continue across this equity market. Cattle market is jumping out to a nice strong finish here last week, and we should see a lot of this momentum carry over into the new year. So look for the upside to continue. Thank you, everyone, for tuning in today. We will catch you guys tomorrow night for our closing comments. Happy New Year and have a good night.